morning and welcome back to Morning Markets from True Potential. Starting this morning by looking at equity market returns from yesterday and overnight. It was a fairly quiet day yesterday. Here in the UK, the FTSE 100 was up 0.1% and the FTSE 250 was up 0.3%. European stocks were stronger, up 0.4%. US equities, however, were flat for the day. Overnight, Japanese equities were up 0.1%. But all in all, a fairly quiet trading day yesterday. European stocks were the best performer of the day. German stocks hit a new record high for the fourth day in a row, really underpinned by upbeat sentiment on the back of strong corporate earnings for Q3. US stocks were basically flat on Monday. Mining stocks fell on the news that there would be a global reduction in the amount of coal used. Oil companies posted positive returns with the likes of BP and Royal Dutch Shell up 0.2 and 1.4% respectively. An interesting development yesterday was the announcement from Royal Dutch Shell that its board had announced a proposal to adjust its dual share listings. Currently, the company offers shares listed on the Dutch Stock Exchange and also on the UK Stock Exchange. In a post-Brexit world, the company has proposed to simplify its share structure by removing its Dutch listing shares and maintaining its UK share listing. In their opinion, this will increase Shell's competitiveness, accelerate both shareholder distributions and its delivery of its strategy to become a net zero emission energy company. This will consequently mean the company's name will change from Royal Dutch Shell to Shell plc, a real importance given the concerns that in a post-Brexit world that companies will gravitate more to doing business in Europe than the UK. This morning we also had the latest UK labour market data which showed continued improvements. The number of people claiming unemployment benefits declined by 14.9 thousand in October following a 51,000 fall in September. It's the 8th consecutive monthly decline. However, the underlying strength of the labour market was evident in the actual employment figures, up 247,000 v the 190,000 forecast. Still, there are signs of a mismatch between the supply and demand for jobs, with vacancies hitting a new record high in the month, up at 1.2 million, which is an increase of 388,000 since the start of pre-COVID level. Meanwhile, there are signs of moderation in the average earnings, with wage growth excluding bonuses up 4.9% year on year. That compares to 6% in the prior reading. In terms of other economic news, China reported some positive economic data. They've been in the news recently following their regulation and tightening on property, technology and education sectors, but also for their softening in economic activity. Yesterday they announced their improvements in industrial production, up 3.5% year on year in October, ahead of the 3% forecast, and braked a run of de-acceleration and downside surprises that began at the start of the year. Retail sales were also ahead of expectations, in at 4.9% v the 3.8% expected. In bond markets, we saw some movement. We look at the UK 10-year gilt, that was up 5 basis points to 0.96%, and in the US market, the US 10-year Treasury, that was up 6 basis points, trading at 1.62. Commodities, fairly quiet day. The oil price didn't really move over the day, trading at $82 a barrel, and gold was also flat. In the currency markets, the pound continues to trade at 1.34 against the US dollar, and saw some strength against the euro, trading at 1 spot 18. Today we'll be watching out for US retail sales, industrial production data, and also export data. That's all for today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.